I mean, first of all, oil prices collapsed for two reasons.
That's right.
And they are all exceptional. One of them is the oil supply, oil production increase from countries outside of OPEC
That's right.
in a record level. 2 million barrels per day. It is the highest increase in the last 30 years.
That's right.
This is one. Second, demand of oil increased very, very slightly. The demand was very, very weak because the economy of major consumers were very weak. For example, China. What we have seen last year, China had the lowest economic growth of the last 25 years.
That's right.
Europe still struggling in the economy. Japan is in recession. These two factors came together. The lower economic growth, therefore lower demand, plus a lot of production happening from US, Canada, and the others. As a result of that, the price collapsed. And now, I believe this is not a situation which will last forever.
That's right.
It's a temporary situation, and I expect that this demand-supply forces will find a balance towards the end of this year, and we may well see an upward pressure on the prices sometime this year.
So when you say upward pressure on prices, do you expect crude to be around $60 a barrel? Is that a new normal for the world, and should the world make its peace with that price by the end of this year maybe?
By law, I cannot give you a number,
right.
But what I can tell you is that the current prices will need to go up in order to increase the production and find a balance in the markets. But I don't think that it will come to the levels immediately, to the levels that we have seen before this collapse. So $110, $120, it will not come there, but it will be an upward pressure. But in the meantime, countries like India, like other oil importing countries, should make use out of this breathing zone, comfort zone.
I was just going to talk to you about how India should leverage this comfort zone, but I will first ask you a question. There are two distinct reasons that you've outlined. One, of course, is the supply glut. The other is the weak global demand. Let's tackle one by one. The supply glut. OPEC has decided not to cut down on production for obvious reasons because there is a lot of supply happening outside of OPEC. US is increasing its shale gas output. How do you expect that scenario to be balanced?
I would expect that
Do you expect an OPEC cut happening eventually?
No. What is happening now is that many companies, oil companies, are cutting investments.
That's right.
We expect 2015 oil investments will be 15% less than the year before, 2014. It's a big drop. It only happened once in the last 2 decades when we hit the 2009, the financial crisis. So it is the second time it is happening. So it is a unique issue. Therefore, we will see a downward pressure on the production, and this will be mainly on the high-cost areas, North America, Brazil, and others.
Right. Fair point indeed. The other bit, and that's about the demand scenario, China slowing down is very bad news as far as global economy is concerned. A meltdown in China means commodity exporters will be hugely impacted. What sort of an impact are you assessing because of the China slowdown right now?
China's slowdown is a serious issue, but we shouldn't forget that China will still grow above 7%. It's a huge growth. China 10 years ago was growing 10%. It was a smaller economy. Now 7%, but it's a bigger economy.
That's right.
So therefore, we will see the Chinese demand growth will be still serious. But I also expect demand growth coming from United States as well, because U.S. economy is very strong, one of the strongest in the world. And second, the lower oil prices, gasoline prices, diesel prices in the United States will give a boost to demand growth as well.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.